Hey everybody, it's your boy Joe the Wealth Architect, coming at you live and direct from New York City, from home sweet home. On my way heading to the gym. I gotta make sure that we take care of the body and the mind, right? It's not just about money, right? We can't enjoy it if we're not healthy, right? It's that health as well. So I want to talk about investing, right? Getting straight to it. The longer you delay investing, the longer it will be for you to experience financial freedom, right? It's just that simple. Because the name of the game is to have money work for you, not to work for money for the rest of your life. And so I encourage you, right? I encourage you, I challenge you. Let's get started investing. Let's not wait till the new year, right? We're 2 months away. We got November and December. We're here. The year is almost over, right? So let's not delay. Let's get started right now in investing. And so I want to talk about the 5 steps. Actually, there are 4, but I'm going to give you 5 steps to getting started with investing, right? The first step, and I'm oversimplifying. There are other states, but I'm going to keep it really, really simple. Get straight to the point. The first step is to open a brokerage account. What is a brokerage account? A brokerage account is basically a type of account, just like how you have a bank account, a savings account, a checking account, high yield savings, those type of things. A brokerage account is like a bank account for your stock investments, essentially, right? So there are companies like Fidelity, which I use. There's, Wealthfront, there's Charles Schwab, there's Robinhood. There's so many different platforms, right? So, and any of them, it really doesn't matter at the end of the day, right? There are some differences. I like, for example, Fidelity, because they allow for what they call, you can buy fractional shares, right? Robinhood is the same thing. Fractional shares mean that if a share of, let's say, Apple stock, I'm just using for example, was $200 and all you had is 100, and your thinking is that you can't get a full share, you would be correct, but with $100 you'd be able to get a half a share, right? You still be invested. You still would be an owner. So I like that. Robinhood has that. Many of them, the platforms have them now. They didn't always have that. But I like Fidelity, right? And so the first thing is to open a brokerage account. So let's say, for example, I'm not promoting Fidelity. Let's say yours is Robinhood, Fidelity, whatever. You go to, let's say, Fidelity, and fidelity.com. It's really that simple. You fill out the form, the application, right? And you won't be denied. And I don't mean an application like a job or something. You fill out the form, your name, your address, your social security number, and your bank information, right? And by that, I mean your bank routing number and bank account number, right? Real simple, right? If you have and routing number is not something that you probably have on hand, but if you either go to the bank physically, you call them, or if you use an app, like I bank with Chase, so if you go to your app, you can get both your routing number, the bank's routing number, right? It's almost like the bank's ID, or almost like a social security number for a bank, right? And your bank account number, right? So you provide those information on the form, and pretty much that's the first step, right? So you open a brokerage account, right? Now, the next step is to connect your brokerage account to your bank account, right? Because there's no money in your account, right? In your brokerage account. So you have a shell, basically. It's an empty, new brokerage account. Second step is you connect your bank account, usually your checking account, to your brokerage account. So now the two are connected. That's step 2, right? Step 3 is to fund your account. Again, now your bank account and your brokerage accounts are connected, but there is money in your bank account, but still no money in your brokerage account. Now you fund it. That's step 3. Fund it means you transfer money digitally from your brokerage, from your bank account to your brokerage account. How much depends on you. You want to start with $50, you can start investing literally with $50. You can start with $25, right? Just get started. That's the key thing. Get started, right? So you fund it, $100, let's say, 500, 1,000, whatever the case might be. That's step 3. Step 4 is basically determining what that, now that the brokerage account is open, it is open and funded. Now the next step is to determine where you want to invest, exactly what you want to invest in. I always tell people who are new to investing to start with the S&P 500 index fund, right? What that is, I've mentioned this in some of my other videos that you can check out. S&P stands for Standard & Poor's 500. Is the top 500 companies in America. The top 500 companies. So all your tech stocks, all your pharmaceutical stocks, your daily discretionary spending type stocks, like, you know, we buy Colgate and all those type of items. All those companies can be found within the 500 top companies, right? So it's a basket of stocks, right? Across 11 different industries. These are the top ones in the country, right? So I say invest there, start there, because you get instant diversification, meaning that you are spreading your risk. Instead of putting all your money in one stock, which I also do, but I also have an S&P 500 index fund, right? It's actually the Vanguard, the VOO. That's the ticker symbol, right? That's kind of like the short name for the company on the stock exchange, right? Every company has a ticker symbol, right? So I suggest VOO, Vanguard's S&P 500 ETF, right? ETF stands for Exchange Traded Fund. We'll get into that another time. But the main thing is, step 4 is you basically allocate the money, right? So you've opened an account, you've connected them, you have funded the brokerage account, and now you have to allocate the money. You have to actually invest the money. If you don't, the money will sit in the brokerage account. It will grow, make some money, very little, because by default, the brokerage firm will put the money in like a money market account. So you make a few pennies, right? It's almost like putting it in a savings account. So it's not just idle, but you want to put it to work so that it works for you, right? So that's step 4. So again, let's say you go with the Vanguard S&P 500 ETF that I just suggested. You would type VOO in the search bar, right? And then the full name of the investment will come up. Let's say you started with $100. You will have that. You will transfer that, or not transfer. You will actually invest the $100 into VOO, and you will be a shareholder. It's that simple. Those are your 4 steps. It's really that simple. The 5th step is not mandatory, right? Because you already invested, but it's advantageous to automate it. Automate future investments. What do I mean? Instead of waiting till you get a bonus, let's say, or some Christmas money, or tax money or something like that, automate it so that every week, every 2 weeks, every month, whatever cycle you want to put it on, because you're in control here when it comes to your money. That's the key, right? We flipping the script. We're not going to have money control us. We're going to control money. So what you do is you automate it so that, let's say, every time you get paid, let's say every 2 weeks, you don't want to have to remember to invest, right? You want to make this a lifestyle thing, right? You don't want to have to remember and risk forgetting. Instead, you want to automate it. So you can say every 2 weeks on the 1st and the 15th, when I get paid from work, I want $25, $50, $100, whatever amount you use, I want it to automatically go to my brokerage account. And you do that in the same way that your taxes are automatically taken out, right? The government doesn't forget. You shouldn't forget, right? The government doesn't forget to take that money from you, right? And allocate it however they want to do it. You want to make sure that you don't forget. And the way to do that is to automate your investments from your checking account to your brokerage account on a cycle. And that is the key. Those are the 5 steps to getting started with investing, right? In future videos, I'll get into more depth in terms of what you should look for in terms of types of investments, what other considerations there may be. But for the most part, 5 steps, right? And then, like I said, the 5th is a bonus because that's really how your money is going to be grow into a snowball by consistently investing, right, on a regular basis. So with that said, this is your boy Joe, the Wealth Architect. Looking forward to hearing what you guys have to say. Was this helpful? What more information do you like to hear? Just let me know. And until later, let's get this money.